Hello and welcome to the weekend market update. Today is 3rd of December. You're looking at a daily chart of S&P 500. S&P 500 had an interesting day on Friday. It was down around 5 points to close at 4,071. But that's not how it started. It started off gapping down. If I show you the 5-minute chart, you can see that there was a big gap down. And that was because of the unemployment report, which came in above market's expectation. So there was a big gap down, but throughout the day, bulls started to take control and started to push S&P 500 higher. And by day's end, it basically closed almost unchanged. So that's an indication that the bulls are not ready to give up control of what's been happening since mid-October. You can see since it reached a low of 3,500, it's been making a series of higher lows and higher highs. And it's currently above its 200-day moving average. You can also see that during this time, the momentum indicators are now positive. On a daily basis, you can see RSI is now above 50, MACD is above the zero line. So that indicates that the momentum indicators are positive. So that suggests that we could have positive price action, and that's exactly what we saw. That even though it traded slightly below the 200-day moving average, the bulls were not ready to relinquish. Also, what you see is that the moving averages, the daily 20 and 50 EMAs, they've crossed right here, and now they're starting to move higher. And you can see more recently they acted as support. So now that they're moving higher, they will now act as dynamic support. So on a daily basis, at least since mid-October, the trend remains up. So this is a trend within the larger trend, which is still negative, and we'll see that in a minute. But for the moment, it looks that the trend is still intact. It remains above the 200 period moving average. The next challenge would be to deal with this downtrend. So let's have a look at this. So this is S&P 500. So this is the downtrend. I'm just gonna go to the daily chart. So this is the downtrend. So everyone's talking about here. Now you'll notice that right here. So since mid-October, S&P 500 has gone up about over 17%. And we're now coming at a key resistance level. Now, previously, when we came to this resistance level, there was a big flush down. You can see that market had gone up 16% at that time. And over here, market S&P 500 was up 12% and then big flush down. So a lot of people are expecting another flush down to the magnitude of 19%, 70%, something like this. But I'm not so sure. I'm not so sure about that, because just because we're coming to a key resistance doesn't mean that it has to fall. Because if trading was that simple, that each time we came to a resistance and it falls and it comes to a support, it rises, I think trading would be that easy. I don't think trading is that easy. If that was the case, we could draw a bunch of lines, support lines and resistance lines. We buy at support, we sell at resistance, and happy days. I think we need to look at what's happening under the hood to get an understanding of why something like this happened, and could something like this happen this time as well. So it's not I think it would be lazy to just say, oh, I'm at resistance, okay, it's going to fall again. Let's now analyze what the macro situation is right now versus what were the macro situation back then. Now, in here, we were in a situation where inflation was rising. So let's have a look at this. So the last resistance was in mid-August. So this is inflation. You can see that from October of 2021, inflation continued to rise, and it reached a high of 9.1% in June. Although in July and August they were a little bit lower, but they were still above 8%. So we were in a situation where inflation was rising. So when S&P 500 was here, March, inflation was still rising. You can see, you can see right here, March would have been right here, inflation was still rising. June, it continued to rise. And then even in August, this is the inflation was high. So as a result, what happened is that you could see each time the inflation report came in, market sold out. If you look at the daily chart, you can see, I'll just get rid of this. You can see this sell-off was inflation related. This sell-off was again due to the strong jobs report. You can see right here there was a sell-off. All these sell-off happened because inflation and the labor market were coming in above market's expectation. But now we are in a situation where inflation is coming down. You can see in October inflation was 7.7%, which was well below the 8.2%. And then on 13th of December, we're going to get the reading for the month of November. And I think the month of November inflation will come in below 7.7%. One of the reasons is this. There are several reasons why I think inflation will come in below. But one of the reasons is the year-over-year comparison will be friendly. See, if you look at October reading, the October 2022 prices of goods and services were compared to October of 2021. You'll notice that in October of 2021, inflation jumped from September reading of 5.4 to 6.2. This was a 0.8% increase in inflation. So the year-over-year comparison was friendly. Now look at what's happening in November. Then from October 2021 to November of 2021, there was also a jump in inflation by almost 0.6%. So again, when we compare the November 22 prices of goods and services to November, I think the year-over-year comparison would be friendly. Yes, the prices may also come down because of all the interest rate increases that have taken place, and prices are generally flat, coming down a little bit, or they're not rising as fast as they were. But year-over-year comparison is likely to be friendly, and that's why I think the CPI reading on 13th of December is going to be below 7.7. I won't be surprised if we get a reading of 7.4, 7.3, something in that neighborhood. So coming back to the chart, we have a situation where we're coming to a critical resistance area, but the inflation picture is beginning to change. Inflation is beginning to come down. In here, inflation, when we had these sell-offs, inflation was still rising or still at an elevated level. Now we're coming to another critical level where inflation has started to moderate, and there are indications that it will come down quite quickly, because you will notice that inflation continued to rise. So year-over-year comparison going forward is going to be quite friendly. In fact, next Friday, we're going to get the inflation at the producers level. So, that would give us a preview of what may happen at the consumers level. You can see the inflation at the producers level has been coming down. The high was 11.2% in June, and since then it's been coming down. And next week we're going to get the November reading. Now, when I look at October to November, I see that PPI rose almost a full percentage, which means the year-over-year comparison is going to be friendly. So I think the number is going to be below 8%. So if this trend continues and market is aware of it, and the CPI trend continues, then you can't say for certainty that we're going to get a flush down the way we did it in August, the way we did it in April, because the inflation story is different. And that's why you're seeing what's happening in other markets like dollar and the bond market and the oil market. All these things are connected. So I think that if the inflation numbers come in below last month's, I think there is a good chance that this resistance could be taken out. I mean, that's basically how I see it. So I wouldn't just say that, oh, we are at a resistance. Yes, we could have some consolidation right here, some pullback right here. In fact, if you look at the daily chart, I won't even be surprised that if we come and tag these the moving averages again. But generally speaking, I think this trend continues for a little bit longer, because I think the inflation story is improving, because the narrative is inflation is coming down. And Chairman Powell also said that he wants to slow down the pace of interest rate increases. Why? Because he doesn't want to increase the rate to a level which crashes the economy. So he's very mindful of the mindful of the economy. The economy is still strong. We don't want to crash it, but we want to slow it down to the point where inflation comes down. I think that's basically what is happening. So coming back to the chart, I think this is an important level, but I think this level is going to be taken out. That's my view. If I look at the weekly chart, what do I see? On a weekly basis, I see the momentum indicators are improving. You can see RSI is gone above the 50 level. Now, since this point, if you look at my cursor right here, since this point, weekly RSI has remained primarily below the 50 level. This green line is the 50 level. There were a couple of instances where it moved above the 50 level, but fell back. So this is the third time it's above the 50 level. If it can hang in there above 50, and look at what MACD is doing. MACD remains below the zero line, so that's still negative, but it's now moving higher. You can see the histogram bars are beginning to get larger. So if MACD can continue to move higher and eventually get above the zero line, so that I think is it would be bullish. If you look at the monthly chart, because we just had a end of the month. So if we look at the monthly chart, you can see that the monthly candle closed above the monthly 20 EMA, the green line. It had traded between the monthly 20 and 50 for several months. And in the month of November, it closed just above the monthly 20, which is a positive sign. And you can see this green candle. This is a bullish green candle with a long wick. And you can see the monthly RSI has gone above the 50 level. The MACD is declining, but it looks like it is beginning to kind of turn. It hasn't completely turned yet, but it is. You can see this. The black line is beginning to curl. So if it continues to flatten out and eventually turn and do a cross like this, that would be bullish on a monthly basis. So monthly momentum indicators are looking promising. It's gone above 50. This decline is beginning to slow down, because you can see the bars are getting smaller. So, and then you can see S&P 500 had closed above the monthly 20. So I see that the monthly chart is beginning to look, good. So only thing is that the weekly, if MACD crosses above the zero line, I think this rally could continue for some time. And I wouldn't even be surprised if we go back and retest, these levels and have a 100% retracement of this level. So that's, something to come. So I think the PPI next Friday, the CPI, on the 12th, and then on the 13th, the Federal Reserve is going to announce, the rate increase. So I think over the next 10 days, we'll get a clear picture as to which way the market wants to go. But looking at the technical picture, I see the momentum is increasing. Momentum is definitely positive on a daily basis. Momentum is improving on a weekly basis. RSI is in positive territory. MACD is not. On a monthly basis, RSI is above 50. This looks like it is beginning to complete its bottoming process. So that's also, I would say, looking constructive. I want to now show you what's happening to the small cap. Let's look at IWM. I think IWM is doing something which I think is could be quite significant. I want to look at the monthly chart, because the month just finished. You can see that the monthly candle, the November candle right here, was actually quite bullish, because you see it had traded below the monthly 50, but managed to recover and gave us a big positive candle. Now it still remains below the monthly, monthly 20 EMA, the green line. Now look at what's happening in the momentum indicators. MACD has been falling since the beginning of this year, and it looks like it is about to kind of the black line is flattening out, and if it continues to flatten out and does a cross, this would be a bullish cross, something similar to what happened here. You see, this cross happened near the zero line, and that's basically where we are seeing the black line beginning to turn. And then you can see another instance in 2016, there was a bullish cross also near the zero line. So the IWM, I'm seeing that the MACD is saying that it's completing this downward move, and if it crosses and starts to move higher, that would be bullish. And look at RSI. RSI was been falling. RSI had fallen below the 50 level. It's now formed a W pattern. It hasn't gone above the 50. So if it's able to get back above the 50 level, and then we have this cross, I think this monthly chart would start to look quite positive, and I won't be surprised if there is a significant move to the upside. So I think it's worth keeping an eye on what's happening to IWM on a monthly basis. So this is beginning to look very, very constructive to me. If I look at NASDAQ is not as strong. I'll agree. So if I look at the monthly chart of NASDAQ, you can see it's currently, but you can see there are lots of, on a monthly basis, there are wicks around the lows right here. So that tells me that there are some buyers at this level. So it's still between the monthly 20 and 50. But look at MACD. MACD has come back down near the zero level. So if it's going to cross, this would be the time to do that. Generally in bull market, you don't see MACD go below the zero line. So I would keep an eye on MACD to see whether this black line continues to flatten, and if so, then we could expect a cross. But this is one of the weaker chart. RSI, monthly RSI is still below the 50 level. So monthly technical picture still needs quite a bit of work. If we look at on a daily basis, you can see that on a daily basis, NASDAQ continues to move higher. The moving averages, the daily 20 and 50, they've crossed and they're gradually moving higher. The daily RSI is above 50, MACD is above the zero line. So on a daily basis, the momentum indicators are in positive territory. But it remains well below the 200-day moving average. All the other averages are either are slightly above. So if you look at Dow Jones, obviously Dow is way above the 200-day moving average. If you look at S&P 500, it's just above the moving average. If you look at Russell 2000, that's also just above the 200. NASDAQ is the only one which hasn't yet taken out its 200 period moving average. So it looks like it still needs, but overall the chart pattern is quite constructive. Now, if I look at some of the sectors, S&P 500 sectors, to see what sort of information they provide, this is XLK. So this is the largest sector in S&P 500. So I can see that since this low right here in mid-October, the higher highs continue. The momentum indicators are still in positive territory, RSI above 50. So any further, so there's this 200 period moving average, any further move to the upside is going to put upward pressure on S&P 500. You can see the weekly pattern is also beginning to look better. RSI has gone above the 50. MACD remains below the zero line, but it's heading in that direction. So if these momentum indicators continue to move higher, we see positive price action. I think that's bullish for S&P 500. If you look at XLV, this is the second largest within S&P 500. This is a weekly chart, and the weekly chart looks quite strong to me. Momentum indicators are very strong. You can see RSI rising. MACD is about to cross above the zero line. So any further move to the upside is going to put upward pressure on S&P 500. XLF, financials, so this is another big sector. So XLF is at the top of this range right here. if it's able to break through and complete this double bottom pattern on a weekly, you can see that momentum indicators are beginning to improve. RSI is above 50. MACD is heading towards the zero line. It hasn't yet crossed. So, the chart looks constructive to me. So further move to the upside, then I see additional upward pressure in S&P 500. Now, if let's say weekly RSI were to fall below 50 and MACD were to turn, then obviously, that would put downward pressure on S&P 500. I'm not seeing it at this time. If I look at communication, so this is one of the lagging, sector, but it's beginning to show signs of improvement. You can see that on a daily basis, RSI is above the 50 line, MACD is crossed above the zero line. So, it still needs to do a lot of work, but I see improvement. XLY, another growth sector in S&P 500, it's been going sideways. So it needs more work. But momentum indicators are improving. RSI is above 50 on a daily. MACD is just right now crossing above the zero line. So if we see further upward pressure, upward move, it's going to put upward pressure on S&P 500. So industrials, if you look at the weekly chart, you can see that strong move to the upside, improving momentum. So that should put upward pressure on S&P 500. XLP, again, strong move to the upside, momentum indicators are improving, so that should put upward pressure on S&P 500. If I look at building materials, weekly basis moving higher, the momentum indicators are also moving higher, so we could expect additional gains ahead, so that should put upward pressure. So when I look at the sectors within S&P 500, I am seeing more positive than negative. So that implies to me that perhaps this rally in S&P 500 is not yet over. If I look at the dollar index, when S&P 500 was declining, the dollar was rising. You see, there was a massive move to the dollar. Now, what you notice is that, see, from this point on, right here, you can see that from this point on, weekly RSI was above 50. And you see when momentum indicators were positive, and you can see MACD was also going higher. You saw prices were going up. Now we see completely different story. We can see RSI falling. RSI has fallen below the 50 level. MACD has crossed and it's moving lower, heading towards the zero line. And that's why you're seeing prices coming down. Right now it closed at the weekly 50. Now I'm still not seeing any sort of reversal on a higher time frame in DXY. But if I look at the daily, yes, it's fallen below the the 200-day moving average. But I can see that it's oversold. And I can also see that it started to move away from these moving averages, the daily 20 and 50. So whenever they move away, there is a propensity to come back and touch those. So these moving average would now act as a dynamic resistance. Just like when DXY was going up, these moving averages were acting as support. Every time they moved away from the moving averages, it came back and touched them. So you can see right here. So the same thing can happen, is that now that it has fallen for quite some time, I wouldn't be surprised if it rebounds a little bit and touches these moving averages. But remember, these moving averages are going to act as a resistance, especially if on a higher time frame you see that momentum is weakening. So any rally on a shorter time frame is likely to be faded. So dollar for the most part looks weak to me. If I look at the what's happening in the bond market, so I'll have a look at the yields. So let's have a look at the yields on a futures market. So if I look at the futures market, I see that in March 2023, the market is expecting Federal Reserve to be around 475. by March of 2023. By April of 2023, market is expecting Federal Reserve to be around 486, which is close to 475. By June of next year, market is expecting Federal Reserve to be around 490. So what I see based on the futures market, the terminal rate, the Federal Reserve is expected to stop between 475 and 5%. So that looks like that looks like a terminal rate, based on the current data we have. So we're going to get CPI reading on 13th of December. We'll see whether these numbers change, but at the moment the market is basically saying that the Federal Reserve will stop between 475 and 5%. If you look at the 10-year continues to pull back. The 10-year closed at just under 3.5%, so you can see it's continuing to move lower. The 2-year hasn't come down as much. The 2-year is at 4.28%. So the gap between the 10 and 2, started to, it continues to remain inverted. So the market is expecting. So right now, here's the gap between the two. You can see the gap is widening. The gap is now at 79 basis points. So this is an indication that the market is expecting a recession at some point in 2023, and Federal Reserve would basically have to cut interest rate to bring the short-term interest rates lower. But there is a debate as to how deep the recession is going to be. Some are expecting deep, some are expecting kind of softish. So it's not yet clear, especially if I look at the labor market. Unemployment is at 3.7%. When we talk about deep recession like in 2007 or even COVID, unemployment rate during COVID was at 10%. Unemployment rate in 2007 was 14%. So if we're looking for that kind of deep recession, unemployment rate would have to jump considerably from 3.7%. I don't know that that would be the case, because the labor market still seems quite strong. So I don't know that the unemployment rate goes up to 10%. So that's why there is a big debate as to, even Fed Chairman Powell said he still thinks that there is a path to softish landing. So he's thinking that yes, we're going to have a recession, but that recession is not likely to be deep. So there's some debate, but at the moment it is inverted. So market is looking for a recession, which we're probably going to have, but there is uncertainty as to what kind of recession it would be. Right, so we've looked at the dollar, so let's look at the gold. So when we look at the gold, what we see is that gold is looking quite positive. If you look at the weekly chart of gold, you can see that it closed quite bullish. This after a couple of weeks of consolidation. See, this red candle was a bearish candle, so the bears could have taken it down. So it did take down last week, but buyers stepped in. And then this week it basically took out the high of this red candle. So this is a bullish looking pattern forming in gold. You can see MACD on a weekly basis, although remains below the zero line, has crossed and moving higher. You can see RSI has gone above the 50 level. So that is looking positive to me. If I show you what's happening on a monthly basis, you'll see that on a monthly basis. So let's bring the moving averages. You can see on a monthly basis, it's now crossed above the monthly 20 and 50. Look at what's happening to MACD. MACD, which crossed right here, seemed to have completed its bottoming process. So it looks like it wants to turn. You see the black line is flattening out. Something similar to it did back here in 2019, and then MACD started to move higher. You can see monthly RSI, which was below the 50 level, has gone above the 50. So I'm seeing that on a higher time frame, gold is beginning to, the technical, the momentum indicators are beginning to show signs of a reversal. On a weekly basis too, I can see that weekly RSI is moving higher and MACD is heading towards the zero line. So that tells me that this move to the upside probably has some legs going forward. If I look at VIX, right, so VIX on a weekly basis. So on a weekly basis, we have this trend line and it has closed below this trend line. Also, you can see that MACD has crossed on a weekly basis and it's heading below, towards the, it's crossing below the zero line is going to be negative. It would be something like this. It would be something like this. Even here, when it crossed, it didn't go below the zero line. Here, it just barely went below the zero line. I mean, it can still turn, but if you look at the price action, the price action is looking weak on a weekly basis. If you look on a monthly basis, you can see on a monthly basis there was this trend line that has, that is in jeopardy. On a monthly basis, you can see MACD's crossed and it's heading towards the zero line. Monthly RSI is below, so this is looking weak to me on a higher time frame. Now on a smaller time frame like daily, it is oversold, so I wouldn't be surprised if there is a bounce. But as long as the daily MACD remains below the zero line and daily RSI remains below the 50 level, the momentum indicators would remain weak. So just to summarize, we are at a S&P 500 is approaching a critical level, this downtrend line, but it is coming to a level where the inflation story is changing. I think we'll get confirmation in about week and a half when the CPI reading come out. I think the CPI reading on December 13 and the FOMC meeting the day after is critical. That is going to make or break as to what happens. And if the market reacts positively, I won't be surprised if we see a big move to the upside, to the point where S&P goes up to around 4,300. Now, if the reaction is negative, then obviously then we have to start thinking about this level and then this level. But I think that the story is changing from an inflation point of view. So I think the bias, and plus the fact that I'm seeing improvement on the momentum indicators on higher time frame, I would say the bias is to the upside and not to the downside. Thank you very much for watching the video.